Hello and welcome to the look ahead for Wednesday, the 9th of October with me, Fiona Sincotta, Senior Market Analyst at City Index. So overnight, we'll be watching out for the rate decision from the RBNZ. We've also got in the European session, the trade balance from the Eurozone. Moving over to the US session, we have oil inventories from the EIA, as well as the minutes from the latest Fed meeting. So actually today we're going to kick off with a look at oil prices. So, oil rallied over 9% last week on concerns of that broadening conflict in the Middle East and that it might impact oil supply. As we've moved into this week, there hasn't been as yet been a retaliation on Iranian oil infrastructure, which was what the market was fretting might happen. And so we've actually seen the attention moving a little bit away from the Middle East towards China, where we've had that disappointment from China as they returned from the week-long holiday, where there wasn't additional stimulus and there wasn't additional news or details surrounding the stimulus announced a few weeks ago, which has disappointed the market and resulted in a sell-off of all things Chinese. Chinese share prices tumbled. Hong Kong, the Hang Seng, fell around 9%. On the FTSE, we saw miners under pressure, and here we've seen oil prices tank around 4% lower. Now, just having a look at the chart, we saw this is the rise up that we saw across last week, ran straight into the 200 SMA, rebounded lower. Look at that bearish engulfing candle, testing support here, which is that 72.50, 71.50 zone that we've spoken about at length. That's the zone that sellers will need to break through in order to get back towards this region here, which is back towards that $70 a barrel, and then the 67.50 down here. So that's what we're waiting for. The fact that we've seen failure to rise above the 200 SMA and that bearish engulfing candle is a pretty bearish sign, but it will all depend on how the price reacts to this support zone that we've discussed. If we don't get a breakthrough there, that support zone, then potentially we could see another move higher towards that $77 the barrel. As far as the inventory data is due tomorrow, we still haven't had the APA inventory data out today. That's often considered a good precursor. So just other things to be looking out for tomorrow. We've got the, overnight we're going to have the interest rate decision from the RBNZ. They are expected to cut interest rates by 50 basis points to 4.75%. Second interest rate or third interest rate cut, I do believe, from the RBNZ. And they are expected to also point to continued rate cuts going forward. There have been concerns. Inflation in the region has fallen below target. There are also now concerns over the economic outlook for the region. So that's why we're seeing the central bank accelerate its pace of rate cuts. Obviously, that has a negative effect on the Kiwi, which has been under pressure against the US dollar, and particularly because obviously we've seen recent strength in the US dollar, which has risen for the past 8 days. So what we can see here was we ran into that resistance at the end of September, just below the 0.64 level. We've seen the price selling off, taking out a couple of key levels. We've also got the 200 SMA, which is being tested here around the 61 level, which is what's being tested at the moment. If we do get a breakthrough that, if we get a dovish sounding RBNZ, and we also get maybe slightly less dovish than expected minutes from the FOMC, then we could see this pair continue towards the 0.60 40 level here, as we head then towards the 60 level. So just having a look now at the US stock market as we think about the FOMC meeting minutes. Now, the minutes come from the meeting where the Federal Reserve cut interest rates by 50 basis points, bumper rate cut. Market's going to be interested to know what it is or the reasons behind the Federal Reserve's decision to cut rates by 50 basis points in the initial rate cut, and also how policymakers are viewing the outlook for the US economy. Let's not forget, though, that these minutes come to the back of signs of a pretty resilient economy. We've had the stronger than expected US non-farm payrolls on Friday. We've just had the trade deficit data, which contracted further. Exports are at a record high. Consumer confidence is solid. So, there aren't too many signs of a hard landing at all here. And New York Fed President John Williams said that he considers that the US is heading for a soft landing. So, that could be encouraging. Obviously, we've got earnings season, which will be coming into focus, which kicks off officially on Friday with the banks. But yeah, so if the market will be looking for expectations that the Federal Reserve will continue to cut interest rates. At the moment, we're looking at a 25 basis point cut in November. The market has scaled back those expectations of a 50 basis point rate cut due to the stronger data that we've seen. In fact, there are some now pricing in 10% or between 10 and 15% probability, it's been changing across the day, that the Fed won't move at all on rates in November. Now, obviously, that's still the minority expecting that, but I do think that as long as we can see this Goldilocks scenario of the Fed continuing to cut rates, inflation remaining relatively low towards that 2% target, inflation data is due later this week, and the US economy remaining resilient, then I think that's good reason to see stocks pushing higher. There are obviously risks to this. Risks are that oil prices rise too high and start inducing inflationary pressures, or that inflation starts to pause or move higher because of the strength within the US economy. So there are the risks to inflation and the Fed cuts. But as long as we don't get any warning signs from policymakers, then we're going to be looking for, this is the NASDAQ, which is just consolidating after breaking out of that triangle pattern. Buyers are going to be looking to get above the 20,300 in order to retest, move towards that all-time high. Sellers are going to need to take out the 19,700 level, 19,600 level, which is the low for October, in order to move towards the 19,000 level and towards the 18,500, which is the 200 SMA. So the other one, let's just take a look at what's going on in the Eurozone. We've had a bit of data out from Germany recently. So I think, look, this is just an interesting one to see. We've seen this obviously fall off here because we've had this weaker data from Germany, raising concerns about the outlook in the country. The sell-off did find some support there at 109.50. That's where it's managing to hold right now. Whether we get a move back around the 110, that's what we need to see in order for any recovery to be taking hold. But I think right now that's looking like it might be a challenge. If we don't make it above that, then on the downside, look out for 109 support and the 200 SMA at 108.70. On the upside, if we do get above that 110 level, then buyers will look to then sort of move towards that 111 on the upside. So that's what to be watching out for there. So thank you very much for your time. I hope you've enjoyed the video. If you have, then please do give it a like. And if you would like to see more videos like this, then please do subscribe.